quantum finally fell out of fashion. That fad didn't last too long, did it? About 2 weeks. And it's interesting with quantum because, people were falling all over themselves to buy this stuff. And as I pointed out, every single day, these shares went from 1 or 2 million shares a day to hundreds of millions. And I don't know for a fact, but I would bet something substantial that 99% plus of the people buying could not articulate a couple of sentences about what precisely it is they were buying. It was just the hot new thing. And then they wake up this morning, it's like, oh, it's down 40% instantly. So not a big surprise there, because I began to really doubt myself when I was seeing just go up and up, and I was like, okay, am I missing something here? Because I don't know anything about it. So as I mentioned yesterday, I tried to learn. I spent some number of hours, not becoming an expert, you can't do that, but at least not being completely ignorant of it. And I thought I kind of sort of got it. And that convinced me even more clearly that, these people are nuts, because this is beyond speculative. And my opinion doesn't matter, but Jensen Huang's does. And all it took was for a reporter to ask, say, what about this whole quantum stuff? And he said basically that, it's probably like 30 years out. If a wild-eyed optimist, if a techno-optimist like Jensen Huang, who has every reason in the world to be giddy about anything to do with new semiconductor technology, says 30 years, it probably means like a millennium or never. So anyway, he said 30 years, and like instantly all the quantum stuff after hours started just collapsing. And so it's falling hard today. And I'm sure the bubble's popped at this point, and they'll move on to the next big thing, which is God knows what. So these fads are getting shorter and shorter, 3D printing, DNA editing. Crypto doesn't seem to die too badly someday. But anyway, I've got charts for you, and I'd love to catch up before we have our 1 day, day of mourning tomorrow, and then back to trading for a day. So let's jump right on in and check out what's checkoutable. And we'll start with the spider, and we're just hanging out. We have been grinding around the same proximity for 2 solid months. Really just not a whole lot going on. I mean, there's not a lot of key economic data to push things this way or that. We're in an interregnum period politically, and earnings season is a couple of weeks away from even beginning. So it's just kind of got its thumb shoved into its pockets, hanging out. But at least it's not going up, and we do still have the prospect of slipping below that very long-term midline of the channel. Diamonds up a teeny bit, but they too have just spent weeks grinding around in a pretty tight range. Boring. The small caps, on the other hand, are a little more interesting. This blue line here has presented itself as support or resistance, depending on where the prices are. And we've spent a couple of weeks here grinding below resistance. So that's looking kind of like the blooms off the rose. And the last chart I'm going to show you today, I think, is going to be a little more persuasive in that respect. The cubes are down a touch. Of course, the big hit was on Monday when we tagged the bottom of the trend line. We fell hard yesterday. And on an intraday basis, we've gotten lower today. We'll see. Maybe we'll end with a little drop, nothing dramatic. The next meaningful level of support is the election day gap right down there. And NVIDIA, which led the way lower yesterday, is also just slightly down today. Lifetime high yesterday, huge drop yesterday. Pretty, for standard deviations craziness with NVIDIA's price action. This is very unusual for something to have the highest point in human history and then, basically go back to its price from half a year ago, all in the same session, which is what happened. Back in June 14, NVIDIA was the exact same price. Actually, it was higher. But way back half a year ago, net change to NVIDIA, zilch. Let's take a peek at quantum. shield your eyes, Frank. Let's just look at a few odds in here. This, of course, is the most comic one, quantum SI, which, as I've said repeatedly, actually has nothing to do with quantum computing at all. And you've probably stumbled upon these AI-generated articles because it's much cheaper just to have a bot slap together a poorly written article about financial stuff, because it's, I've seen this all over the place. Things that change frequently, like what's going on in the celebrity world, what's going on in the financial world. They've got these bots that'll put together a couple-page article, which is, really badly written. It's quite obviously not written by a good human writer. But they were twisting themselves into knots. These bots were trying to explain why quantum was so hot. And they tried to talk about quantum computing and so forth, never really realizing that just people were buying the wrong thing. But anyway, QSI has, in the span of a few days, gone from $5.77 to 2.69. So about half the value gone on that. Stuff that actually does have something to do with quantum computing are the likes of IONQ. I don't know if that's pronounced IONQ or something, but IONQ is the symbol, down almost 42% in a single day. Lifetime high just yesterday. And that's very common with these things. Many lifetime highs just set literally hours, trading hours ago, and then losing 40 to 50% of their value. Qubits, mentioned this one yesterday, down about 40% on that. And that's what I was saying about the volume. It's gone from just nothing to what used to be, when I started trading, a 214 million share day would be like record huge. Now it's just like one unknown stock does that. And then the one everybody was gaga over, Rigetti, RGTI, down 45.54% in a single session. And having moved from 21.42, it actually got down to the single digits today. So greater than a 50% drop in just a couple of trading sessions. So pretty brutal stuff. So all that volume, they didn't all sell at the top, I'll tell you that. So yeah, quantum, I'd say we talk about that much for a long time to come, I suspect. Gold, you know what? Earlier today, I pulled the plug on my GDX puts. I got a pint-sized profit out of it, just pipsqueak. But gold is just too strong for me to stick around hoping it's going to, and I'm okay with that. I'm a long-term precious metals bull. I'd love gold to be a lot higher. I'd love silver to go a lot higher. All the pairs charts I look at scream the same thing, which is long precious metals, short equities, or both. But yeah, threw my hands up, took a literally like a couple $100 profit and just was done with it. So I don't have to sweat out precious metals anymore. But yeah, GLD pushing out of its former topping pattern. Bonds today was Fed Minutes Day, and it seems that all the Fed members pretty much said inflation's not dead, and there's definite risks on the horizon for inflation to come back. I guess the selling was already done because TLT really hasn't budged, but it's still, as you can see, been very, very weak for quite a number of weeks. And that has not been missed by some of the interest-sensitive items. IYR, we're cleanly below this resistance level. LQD, we haven't looked at this in months. This is the corporate bond fund, LQD. And this one slipping below its own former support level. XLU still down about 0.5%. This one peaked right up here. This is the ETF for utilities right around Thanksgiving. It fell very steadily, and that's been stabilizing beneath this resistance level. And in turn, my one and only position related to any of those things is continues to be Next Era Energy, NEE, which is down itself about 30%, like so. Some odds and ends from the short sale world. Wing, which is Wingstop. I don't have a position in this anymore, but as I've said, I bet you I will rue the day that I got out of those puts because this looks incredibly vulnerable. Let's look here. We're basically at the same level now that we were way back here at the start of last year. So over a year ago, just kind of come full circle, but there's precious little holding support beneath there because the ascent was very swift. And unless there's a real concentration of trading activity at a certain price, that just doesn't offer a lot of support. So this is very vulnerable to, some bad earnings report. So yeah, I got out of those puts at a nice profit, but I'm sure it's going to be bite-sized compared to what it ultimately works out to. So Wingstop, very vulnerable. Same with Cleveland Cliffs, although the difference here is that the price itself is a single-digit stock as opposed to hundreds of dollars with Wingstop. So that not as much juice to get out of that lemon. But this is also working its way toward support. Another former position, Lumen, tiptoeing lower still. Monster top on that one as well. But I'm not out of everything. I've still got the Baker's dozen of positions here, and some of them happily started behaving properly. BP being the main one. I mentioned yesterday how I gobbled up a lot more puts yesterday, defying the strength in this sucker, and it decided to give me a break, and it's down about 2.5% right now, and those are April puts, so those are getting a lot better on that. And here's the head and shoulders top on this, and hopefully this line, which was yesterday's high, will hold. If we bust past that, forget it. I'm not sticking around anymore. But this is just in the nick of time. Turn south on BP. Crocs, the shoemaker. This one is down about 1.3%, and you can see kind of the logic there. This is the third instance of a rounded top. And Uber, UBER, Uber Technologies, which just to kind of recap, this is kind of a fascinating thing that went on earlier, a few months ago. For those that have missed it, this sort of goes hand in hand with what was going on with Tesla, because Tesla had a big event back on October 10. And that was to show off their new robotaxi. And it happened in the evening right there of the 10th. So that was Uber at the close, of course, that bar right there. And the event happened, and it was kind of a dud. And there was a lot of very kind of eye-rolling reaction to it. And Tesla fell really hard the next day because I think the perception was, well, Tesla's kind of not going to have their arms around this business opportunity for a few years. Uber is going to own this thing. And so Uber blasted higher on huge volume to a record high, got up to $87. And that was kind of the peak, because from that exuberance following the sort of flop of an event, it fell for months, rebounded to some degree. But I got into puts here because here's the beautiful pattern that was formed in the process of all that craziness. And this is doing pretty good. We had a nice tumble yesterday and today. That's Uber. Rivian provides a nice example of what I was saying about a week or so ago about how it just didn't seem to catch fire. We've had a base, and another base. And in those instances, they have tended to be followed by these rallies. This was the worst of all, because you got a rally all right up to here. That was it. 3 days later, all gone. So that's why I didn't bother, because I knew that it would sputter out. I didn't think it would sputter out that quickly. I thought it would probably go ripping higher like so. But it's kind of like lighting wet kindling. You've got a flame, but nothing's catching. Same idea here with Serve Robotics, SCRV. If this were 1982, if this were a cheap market, this is exactly the kind of stock that you'd want to get into and hold forever. It's a beautiful pattern. This is not 1982. Stocks are incredibly expensive, the most expensive they've been in the history of the universe. So yeah, you can get a breakout, but it don't mean nothing. It just rolls right over. So that's what happened to Serve. One last chart for you is this crazy creature right here. I hadn't looked at this chart for weeks. But I stumbled upon it today, and it is a study, because the cool thing is that this is the percentage of stocks above the 200-day moving average. As you can see, for an entire year, it just ground around in this range, up and down and up and down and up and down, just sort of more or less 70 to 75% or so, stocks being pretty stable, pretty strong, climbing more or less together Then finally, after an entire year, we're seeing the breakdown like so. I think that's a pretty important change and speaks well to the erosion of the breadth out there. Charts don't lie. This is what's going on. The percentage has slipped from the likes of 75% down to more like 53%. So worth noting.